Welcome back to another Hump Day Real Estate with Kendell in the DMV. And right now in 2026, we're going to talk about your pockets a little bit. But in your pockets, we're going to talk about real estate. And we have a guy here that does loans every day in the DMV. And he's going to announce he's closing loans every day in the DMV. And who do we have as a special guest today?
Washington, Lone Depot.
Brian, we appreciate you, man, coming on. This is the first episode of 2026. So we thank you for taking out the time in your day to come on with us and share your wealth of knowledge in the real estate space.
And thank you for having me. 2026, let's go. First guest,
2026.
too. I appreciate it, man. Hump day.
Yes, sir. Yes, sir. Hey, man, right now in 2024 and 2025, it's appeared to be still somewhat a seller's market, right? But you can answer if you want.
Oh, I'll let you finish your thought.
Yeah, it seemed to be edging between seller's market and buyer's market. I think this year we could clearly say it's the buyer's market. You feel that
You
way?
know, some streets. Yeah. It just depends on the area, depends on number one, I think that the first thing is it depends on the area. And then I think secondly, it depends on the price. How do you walk yourself as a real estate agent? How do you counsel your listing clients, how they should, price their home based on what's going on in the market? Are you seeing trends going up or down? And I guess my point is they need to listen to you because you've got, as a licensed agent, you have more data than anyone else in this market. The newspapers, they can say whatever they want. They're there to just write articles, but you have the live data. On a day by day basis, you're talking to people every single day about buying and selling property. This is what you do. And I think if I had to, stress anything, that, people should be listened to, listen to the experts that are doing the job, not the people who are reporting on what the experts are doing, because those are two different people. We have two different goals. Their goals are to sell newspapers and or, sell subscriptions to online news articles. Our job is our job. This is what we do, every single day. And we're talking to real live people every day. And we see the trends. So, yeah.
And I agree with you. It's all depends on where you are. A lot of what I've seen so far, especially last year, as I really saw that buyer's market, and especially with investors. I've had several investors who were able to get deals 40,000 below list price, um, and especially in the Baltimore area, and on a lot of and these were properties that the elders were on their way to baby boomers, if you will, were on their way, they were retiring, etc. And they were some of the folks have already moved to Florida or wherever they were going to spend their last years, and the homes were sitting on the market. And what we were able to do is I identified those homes where the investor was running around looking at wholesale deals and all these other things that weren't really deals. And I pulled those guys aside and I said, man, let's take a look at deals that have been on the market 50 to 100 days or what have you. And I could clearly see that they were overly priced. And I just let them get beat up for a couple of weeks, right? Or, a couple of more weeks, let them get beat up. And then we go dive in there with a cash offer and,
Yeah.
and get a deal that most people just won't get for being strategic about uh, working with an agent, first of all, to be strategic about how you buy a property, right? And that's where I kind of come in and I work and I'm gonna brag on this real quick. So I created this thing called the Kendell Advantage. And the Kendall
Nice.
Advantage is based off of being strategic about buying and selling homes. And that's the way we got those deals, man. Is we actually I went out there and I searched and I looked for who's sitting on the market, who probably went under contract and went back active, and then I took those buyers to those properties. But in my opinion, doing that applies not only for investors, but it also applies for somebody that's going to live in the homes. And I think that
Absolutely.
I think it's a big opportunity where they talk about the millennials not being priced out of the market. But you're only priced out of the market if you go and play where everybody is playing and use the same strategy everybody's using, right? And so if
Right.
the only way you're going to buy a house if it's fully renovated and eat off the floor gorgeous, if when those interest rates come down, if they do, or the folks just jump back in the market, that's the reason why you're probably not going to get a deal on a house right off because you're competing against everybody else. Why don't you go and compete with who you can beat, and you can beat out an investor every day, all day long, right? Because the investor has a has their own structure of the way that they actually buy. So, what do you think about that?
You get that's a lot of meat on the plate there. The first thing that comes to my mind, based on what you said, is, this talks about your experience when you got your own system. Because ultimately, because I have one too, and I know that you've got your system based on the experience of all your years in real estate, learning from your successes as an agent, learning from your client's success, and then also learning from clients' mistakes and where they misstep. And it helps you come up with a system so that your new clients come on board and it's more like, here's what we need to do next. Here's step one, step two, step three. Here's the things we need to look at. We need to look at this, this, and this. We need not look at the following this, and this. So I think it's awesome that you got that system in place. It just says that you care about your clients and you're trying to collect all that data and make it better for everyone else, just coming behind, your clients. So your experience is paying off big time. So y'all take advantage of that. And I would tell you as it relates to, yeah, go where you can win. I mean, what's the point of going out? Because this is a competition. I tell clients this all the time. So I'm like your strength and conditioning coach, okay? Marcellus, he's going to be the coach out there on the field. I'm getting you ready to go out there and be with Marcellus, so you can, write the offer and win because it's going to be more than one person. Because the DMV, DC, Maryland, Virginia area, which in our real estate world now, we talk about Baltimore no matter where we do business. We talk about the Baltimore MSAs, suburban areas. And you have to be ready to go to those areas because sometimes some clients are priced out of this market. So they have to be ready. So the point is, yeah, go where you can win. If you can win up there, go win in Baltimore. We'll go with you. I'm licensed in DC, Maryland, and Virginia. I went to Morgan State University, so I get it. And there's some nice properties up there, nice places, nice neighborhoods. But you got to work with a professional who knows the area and what's going on. Because I've seen some of my clients go up there and relocate very happily and very comfortably. Okay. So yeah, I have what I call my quick six. You answer these quick six questions, and boom, I can tell you exactly where you're gonna more likely end up, what program you're going to be using, when it's all said and done. How does it look for you? What you're going to come out of pocket with, and how do I go to Marcellus? All right, Marcellus, here's the deal. This is what this client has. You know, can you see out there and where they're trying to purchase? Is there any down payment or closing cost assistance coming from the seller? I got the down payment assistance program because a lot of people forget that there could be no down payment to the sales price, which means the sales price is say $400,000. You can finance $400,000. However, there's closing costs, which can be about 5 to 5.5, 6%, depending on jurisdiction you go in. So that's another 20, 25, $26,000 that you have to come up with. The seller can pay that. We can work together, with Marcellus to creatively, structure so you can still come to settlement with little or no money out of pocket. Like we got the Maryland Mortgage Program, it's a great program, giving you like 5% toward that, 6%. So you can come to closing with, 1%, or our internal product, which is the Access Zero. no down payment, and we pay a little bit of your closing costs. Doesn't matter your income, doesn't matter if you already own a home. And you can go down to a 600 credit score, where Maryland mortgage, you're stuck at 640.
And am I right also to say so Loan Depot is not like a bank, right? It's more you have multiple lenders you could shop for your clients, right?
Yeah, we got the best of both worlds. So we can broker our deals out. We're a direct lender. Let me
Okay.
say that. And my NMLS number is 658 931. And but the main point, I got to do that for compliance reasons. You know how our world is now.
Yep, yep,
But more importantly, like you asked, we're a direct lender. So that means we have products that are internal to us. We fund our own deals and then sell to Fannie Mae, Freddie Mac, and any other investor. And then sometimes we broker deals out, and some deals we keep in house. We just service them themselves. So we do have the best of both worlds. So if I have to get creative, like I'm doing we have our own internal DSCR loans now. So you and I have had conversations, about this in the past.
right,
So at first I was brokering those deals out. Now we have our own internal, money for that, which means our interest rate is going to be a little bit less compared to when I used to have to broker it out. Okay,
hmm
a little bit less. But it's definitely it's notable. Let me
yeah,
just be honest with you. It's a noticeable difference. Like, oh, okay, this is better because it's now our money, and we're
right.
super rare when it comes to that. I don't know of any other direct lender that's doing it. I know we are, and just priced one up a few minutes ago, and client was like, "Oh gosh, I'm gonna save that much money, so why not?"
So are you doing those in Baltimore?
Yeah, we don't have any. Good question, because I know we talked before. Some of these lenders were pulling out.
Yeah,
We're still in Baltimore, no problem. Of course, it's by case basis. I haven't run across anything that has made my underwriter say, "Nah, we can't do that." You
good.
know, you know.
Good, good, good. And one thing I want to throw out there though, so my example was based off of an investor in Baltimore, but we strategically can do the exact same thing in PG County and in DC. It's just we're looking for a house that's not all put together pretty much, right? And so and these things might turn into other loan products like the 203K or home ready style renovation loans as well. If there are opportunities out there where a person just sees, hey, this is a nice house in this neighborhood, and if I can get the money, so I'm getting it for a good price, so I can get the money to renovate it to my liking, that might be golden for somebody.
You make money when you buy. I mean, you're helping your clients make money when they buy the property. A lot of people, they don't want to deal with renovation financing. They don't want to deal with fix and flips. If Because what I find now is most investor clients, they're making good money on the rentals when they go in and buy that dilapidated property, and they're willing to do the renovation financing. So, I have that, as well. I love it. Every time, if I move, and the last company I was with, that was close to 10 years. But if I move, and the only reason I moved over here is because Loan Depot is really aggressive, and they're aggressive about renovation financing, because I can do renovation financing for the investors. I can do renovation financing for a VA client, a first-time home buyer, but not with a first-time home buyer program, but just a first-time home buyer. And yeah, it's a sweet deal. We got one client right now. They're gonna walk in the property, and she's closing Monday. She's gonna walk in the property with like $45,000 in equity, man.
Mm.
$45,000.
And that's what we want, man. We want to position buyers for future financial situation, right? Not only just have folks buying homes, if we could position you in a way where you now understand one of the main reasons you want to buy real estate, right, is you want to grow some equity in property, etc. And this will allow you for future advancement. One of the things I think that millennials are missing, or that they're teaching millennials about they're trying to say, well, you can't afford homes, this, that, and the third. If you strategically look and buy property where it might be hard for you because you're saying, well, how am I going to make 100,000? I'll put $100,000 in the bank, etc. Well, if we strategically find you a property that starts you out with $45,000 worth of equity, and you're in a community where the values grow, we've just helped you create $100,000, right?
Yes,
And
indeed.
yeah, so these are things that I'm into, that I want to help people with, is having an understanding how, where you say that you can't get this money, or you can't, because what a lot of people don't know, there are commercial deals that you can do that they will use the equity in your property to help you if you build equity like that. So the fastest way for you to get to that type of situation, in my opinion, if you strategically buy a property and you become an investor. We're not, you don't have to be an investor where you're renting out, but we mean invest in real estate first, where other people are saying real estate is a bad deal. Well, go out there and try to figure out how you're going to put $100,000 in a bank account in the next 2 to 3 years.
Yeah, that's funny. If I hear anybody says that real estate is a bad deal, that means you don't have the right transaction team. You don't have, the right real estate agent, because a lot of real estate agents they're not very comfortable talking about, building equity. They're not, comfortable talking about finding a deal. They're really comfortable trying to go to closing,
Yeah.
but to help you all out there as a client, build wealth. You need a real estate advisor like Mr. Kendall here. That's who you need. You need somebody like him in your corner that is looking at not only today, but tomorrow. Because I used to say that all the time when I was a licensed rep in Atlanta, Georgia. I said, look, we're taking a picture of who you are today, and I want to know where you want to go, where you want to end up. Because we always have to start out with the end in mind. And something you said earlier reminded me of a saying back in the day. And we used to say, get in where you fit in.
Hmm.
I don't know what that was about and why we used to say that. We say, look, man, get in where you can fit in. I think it's the same thing with real estate. Hey, yeah, you may have had an idea that you wanted to be in that neighborhood, et cetera, et cetera, et cetera. But the reality is you can get in over here. All
Yeah.
right, fine, so be it. But the bottom line is you're still going to save on taxes right now based on tax laws. All right. Okay. Yeah, you still going to, save on interest. Okay. You have the tax laws, and then you also should gain in equity. You should. Past performance is not indicative of future results. However, on average, the national average is about a 4% growth rate year over year,
Hmm.
compounding. So when you're earning 4%. So if you have 400,000, you're earning 16,000. Now your property the next year is growing at 416,000 in terms of value, not 400,000, but 416, and then so on and so forth. And that's how you gain that equity that Marcellus is talking about. Not because it's growing at 400 each year, it's 416, and then on top of the 416, so on and so forth. So yeah, make money when you buy, get in where you can fit in. Don't worry about the Joneses either. Forget about who, friends and family, what they do, what they think, because like you said, who's gonna walk by and say, you know what, you're a nice person and you're my family, and we have Thanksgiving together. I'm gonna give you $100,000.
It ain't happening. It ain't happening. It,
It's
it,
not
it, ain't-
happening.
it ain't happening. But if you just take what you just mentioned and go get in where you fit in, we find you a house for 325, and maybe you got to figure out how to put 25,000 in it to make it like it. And then the house is worth 400,000. So you just walked into $50,000 worth of equity. And Brian just said, well, if the house appreciates 4%, well, next year you're looking at $56,000 worth of equity, right? And that's the game you want to play, because now you got compounding equity position that's taking place. And if now just say something crazy happened in the community you buy in, just goes up bananas like some of these areas have done, and folks end up with 100, $200,000 worth of equity within the next 5 years. You can't get that, folks, without putting in work. And you know.
Yeah,
So
and thinking about the economy, right? Now, I'm going to say something about the overall economy, but just think about this. We do have, I always said, look, there's the world economy, then there's the national economy, there's your regional economy, and then there's a local economy, right?
mhm,
Listen, what really matters is what's going on in your house right now. What matters? Is your lease about to be up? Are you paying too much already in taxes? So that's what should make you make a decision. However, I will also say this based on what's going on in our world today, there's a lot of companies that are trying to come back into the United States. And as a result, people who have jobs, there's only four major ways to save on taxes. That's own real estate, own a business, give away aggressively, and save aggressively into your 401k. All right. So we're going to be talking about real estate. And I always like to think about Ray Kroc. Ray Kroc leveraged his house to keep McDonald's going. Okay,
mhm,
without him having a home, we would not be able to go out and hit a drive-through and get a number one with and a number and six chicken McNuggets on the side. You know what I'm
mhm,
saying? I'm not endorsing that, but I'm just making a point.
mhm.
Without him owning a home, we can't go get chicken nuggets in a drive-through today. All right.
Yeah, yeah.
So so
That,
that's just one more note and message. Look, don't forget about everybody else. Focus on you.
well, I'm going to take that what you did, and I'm going to go a little further, but we're going to go to the investor angle. Now, Robert Kiyosaki said in his book that his wife Kim wanted to buy a Mercedes. But the lesson that Kim knew from what they had always been into the system that they had ran, she knew that she had to go buy a house that would pay for the Mercedes. So for the folks, whether it's your first time or whether you're thinking about real estate for investing, think about all this money you guys pay for a nice car. What if you also can buy a property where the tenant actually pays for that car? Make that make sense. Now you're growing equity in your property, and you have a car that tenants are paying for. I ain't talking about winning financially. Come on. So
Yeah.
these are
And
the
and
things,
don't forget you're saving on taxes.
and you save on taxes. So these are the things we got to think about, folks. These are the things we need to be moving towards. Not just buying a house so we can show off property, this, that, and the third, and then you still need $100,000 because you done paid 50,000 over, and you got all these other things going on, and then you're still trying to figure out how you're going to make the 100,000. But we're sharing things that you can, on paper, we can show you how to start getting towards that 100,000, especially you millennials. You got to figure, you got to look at this real estate as a good opportunity. And we're not saying that you only just have to buy a townhouse or a single family house to live in. With the first time home buyers, you could buy a 3 or 4 unit property. You know,
Absolutely. And I think about you say multi-unit properties. That was one of my first clients. He did a renovation multi-unit property, okay? Because he took the advice of his father, who happened to also be a real estate agent. He said, look, just like you saying, hey, think about that. So now he's got one, two, three, four, five. He's got he's got 10 doors. He's got 10 doors now. Okay. And each property he purchased, he did it with me and we bought it as primary residence. So that means he only had to put down 3.5%. Okay. Three and a half
mhm.
percent down payment. And all these properties in Washington, D.C.
Wow.
So I don't need to tell exactly, right?
Yeah.
To say he's a happy camper is probably an understatement. All
Yeah.
right. Because he took advice. And that's what you're talking about is look, take, trust me, believe me, take the steps. Let's have a conversation. And I would say, too, more importantly, if you're listening to this and you've gotten this far into it, set an appointment with us. I don't charge anything for a consultation. Marcellus doesn't charge anything yet. probably should, for having a consultation and let us figure out what's good for you and your family or in your investor situation or your next step as an investor. What should your next step be as an investor? Because you know n- just because you've done it once doesn't mean you know how to do it. Because how many times, Marcellus, have you ran into a client who's like, I wish I'd have met you 3 months ago, 6 months ago, or a year, or before you bought that property? How
Just
many
last
times has
week.
that happened?
Just last week. This last week we closed on a transaction, and the deal went crazy with the lender that he had, and literally after I talked to him, he was like, "Man, I need to sit down and talk to you because he has all these properties, and then he's still trying to buy like a homeowner, and he needs to get out his own way with trying to keep that lower interest rate. And he saw a deal that should have took 20 or 30 days to close took almost 60, 70 days because he's changed now. You have all these properties and you're still trying to buy the same way. And there's ways that you can still do that, right? But you have to modify your portfolio the proper way.
That's
Uh,
right.
yeah.
I,
So
I tell my clients all the time, you're never the same person that I met the first time or the second time. Because, like you said, you've got, first, I may have met you, you don't have any property. Now you own property. Now you own two properties. Now you're trying to buy three properties, so you're a different person. Even when you come back to refinance with us. So that means we have to stay in touch and we need to review your real estate portfolio, which includes sometimes your other parts of your finances. We want to be part of your wealth building team. That's just the bottom line. All right. We're in this. We're not going anywhere. So we're going to be looking at you for today and tomorrow. Because if we advise you wrongly, it's going to stagnate your opportunity for growth and to be able to move on to your next transaction. If you're that type of investor or that type of client that says, hey, I'm ready to move on. But if you make the right steps, take the right advice as we go through this, it's easy. It's easy because we're pulling from our own personal experience and we're pulling from our own professional experience to say, this is how you do it. All right. No reason to, experience is the slowest, most expensive teacher in the world. Okay. So let me experience for myself. Oh, okay. It's going to cost you time. It's going to cost you money, which you don't want it to do. You don't want to do that.
folks, you want to get with the 6 steps and the Kendell Advantage. And with that, Brian, I know Brian, we have to get Brian going. So Brian, share with the folks how they can reach you so they can set up a consult with you and see how you can help them.
Yeah, we'll let's put it down in the link later on if you
Yeah,
don't mind. You can help me
will
with
do.
that, sir. But you can email me at Brian Brian Washington at loandepot.com, Brian Washington at loan depot.com. Just shoot me an email and say, hey, send me your calendar, and I'll shoot it back to you, and you lock in a 15-minute or 20-minute consultation just to get us going and get your application done. And then we'll get on the phone or get on a Zoom call or a Teams call and go over the process and the numbers. And hopefully at the end of that, give you a pre-approval letter. You go out shopping with Mr. Kendall and, hey, live happily ever after, building wealth.
Brian, I appreciate you once again for taking the time out of your busy schedule and coming and giving a wealth of knowledge like you always do. And I hope to get you on again soon so we can have a little bit longer time and give out some great, wonderful information.
And thank you for having me, man. Kicking off 2026.
Yes, sir.
Nice way to
Appreciate
do
you.
it.
Yes, sir. Thanks again, and I'll talk to you soon.
Yes, sir.